Making this one mistake could cost you dearly. A lot of brokers these days offer leverage. So, for example, 500 to 1 leverage. What that means is if you have £1,000 in your account, you can take position sizes that would represent £500,000 in notional value. And you think, well, that's great. I can take big position sizes and I can make a lot of money very quickly. Yes, you can, but you can also lose a lot of money very quickly. If you look back at that losing streak video that I done earlier, you will understand that variance is going to happen. Most systematic trend following systems will experience 8 losing trades in a row, if not more. And so what you need is a capital structure and a risk profile that matches that capital structure. If, for example, you have £5,000 as your cash asset, you cannot afford to take £500 of risk per trade. Because according to mathematical logic, you are going to have a losing streak at a certain point. So if you have 8 losses at £500, you will be down £4,000. Ouch. So in that example, £50 risk would be more appropriate. What that will allow you to do is to survive a losing streak financially and also mentally, and to be able to move forward. So if you have 10 losses at £50, you will lose £500. A bit uncomfortable in the short term, but it's not going to cripple you. So you have to bear this in mind. It's extremely important. You can do everything else correctly, but you get this area wrong, and it will just mess you up. Also, if you're thinking about depositing a small amount of capital, maybe £2,000 or £3,000, and you're thinking of taking £500 of risk per trade, you're going to be out of margin very soon. Just naturally. Doesn't matter how good your system is, eventually it's going to cut you off, because you are going to have losing streaks. And then when you experience that, then you have to go back into your account and put more money in. Okay? The better thing is start with the appropriate capital structure that factors in the variance to begin with. So then, when you have the losing streak, it doesn't surprise you. It's like, okay, cool. I had 8 losses in a row, but I'm still in the game. And if you have a good system that has a good risk to reward ratio, which I'll talk about in future videos, you will recover those losses. Okay? So we want to have an effective capital structure that supports the risk that we are taking. You should never ever get yourself into a position where you are taking risk that is disproportionate to your overall cash asset. Because if you're doing that, the foundation is built wrong. Think about a building. A building needs to have the right foundations to be able to withstand all kinds of weather conditions and things like that. Same thing with your trading system. The capital structure is key. Don't think about variance later once it's hit. Think about it before. So before you put capital into your trading account, you think, okay, this is my system. what is the maximum consecutive losing trades that I can expect in a row. And for most trend following systems, it's going to be in the region of 10 to 25 losses in a row. Okay? And it's one thing to talk about losses in a theoretical setting like now. It's a whole other experience to actually experience a losing streak. Okay? And if you've gone through that, then you will know what I'm talking about. But the key thing is that you can come back the next day and take the next trade. But if you don't manage your money, you're not going to be able to do that. Okay? And I'm going to talk more about that in future videos. Take care.